Hi, this is Dylan. Welcome to my daily trading analysis video. So today is the 22nd of December, Monday itself. And so let's start off with the euro against the US dollar. This is 4-hourly charts. There is a falling trend channel over here. As you can see, the price has touched the top of the falling trend channel, resisted and fell all the way to the bottom as low as 1.2218. Breaking below the previous low at 1.2246. So right now what we see is that there seems to be a little bit of support over here. Price is it looks like it's about to rebound. But first thing to take note is that price has yet to touch the first exhaustion level of 1.27.2 Fibonacci expansion, and it has yet to touch the bottom of the falling trend channel as well. So zooming into the 1-hourly charts, we do see that price is currently resisted by the 20 moving averages with a kind of magic candle over there, reversal candle. So if the next candle were to be a bearish one, that would signal that price might fall even further. Stochastic, yes, is at overbought as well. So let's just wait and to see if price is able to touch the bottom, and that might give a opportunity to go for a long if you were to go into a trading the retracement. Right, if not, we will just wait for price to appreciate, retrace further to a certain level. We can always use the Fibonacci retracement to gauge, but we will just wait for price to retrace a little bit further if we were to go and wait for a short opportunity at this point of time. Alright, so that is for the euro against the US dollar. Next, we have the New Zealand dollar against the US dollar. These falling charts, as we can see, there's falling trend channel as well, although it has been broken once. But when the price came back to the top, it came down to the bottom of the trend channel and it started to rebound. So it is pretty much still respecting this falling trend channel. Right, so one thing to take note is the price has touched the bottom but has yet to touch the top. Right, so this is a falling chart. We do observe that there's a very strong pullback for this for this previous candle, which may signal for price to actually retrace even further. So what we are going to wait for is for price to retrace further, touches the top, and to see if it's set up to go for the shorts for this currency pair. And if it is going to fall further, then the first level we want to look at is somewhere at 0.7668, bottom of the falling trend channel, to see if you rebound higher. Right, but of course, preferably, which it is advisable to wait for the short opportunity for this currency pair. And well, yep, that's for the New Zealand dollar against the US dollar. Next, we have the pound against the US dollar. Still trading within the falling trend channel. This is a 4-hourly chart. Price touches the top, went all the way down to the previous low or the final exhaustion level, price of 1.5545. So it rebounded, came up, right, and right now we're seeing the price is still retracing in a way. And of course, the next thing we can wait for is for the price to touch the top of the falling trend line. For the falling trend channel, to see if there's a opportunity to go for a short. Maybe you can zoom in the 1-hourly chart. Right, so it's still kind of like market is still kind of consolidating at this point of time. Not advisable to go for any trade till it touches either the top or back to the bottom at the final exhaustion level, price of 1.5545. So that's for the pound against the US dollar. Next, we have the Australian dollar against the US dollar. Right, as you can see that in the 4-hourly chart, there was previously a falling trend channel, a major one. Price has broken below, came up, got resisted at the bottom of the falling trend channel, and started to fall, and at the same time forming a minor falling trend channel in the 1-hourly chart. So what happened right now is that price is testing the top of the falling trend channel, yet to close above it. In the next 40 minutes, we will be able to see what's going to happen. And if in the next 40 minutes, and when price closes above the top of the falling trend channel, it signals that price may retrace further. And of course, the first level we're going to look for is at the price of 0.8200. Right. If not, we can also plot the Fibonacci retracement from the top to the bottom. In the 1-hourly charts, the 38.2% retracement level at the price of 82.08 could be a key resistance level. And of course, it is also at the same time, by the time it reaches here, the 200 moving averages will coincide together with it. That gave an additional support for a strong resistance level over here. Alright, so that is for the Australia against the US dollar. And of course, if right here itself, whereby stochastic is already at overbought, if these candles happens to be a reversal candle, or if it falls further and forms a confirmation, this could be a better setup to go for the shorts. Right, so that's for the Australia against the US dollar. Next, we have the dollar against the Japanese yen. So this is the 1 hourly chart. There was previously a falling trend channel, but price has appreciated and broken above when the during FOMC states conference, whereby the Federal Chairman Yellen herself has made clarity that they'll raise interest rate by next year, and there's speculation that the interest rate hike might be as early as April 2015, and therefore that brings appreciation for the US dollar. But right now what we're seeing is that we're seeing is that there was a minor rising trend channel that's forming, a probable one, but the thing is the price has kind of broke below it and got resisted at the resistance level of 119.52, and therefore this could signals for a retracement for the dollar against the Japanese yen. So first level we're going to look at is at the 55 moving average. If it were to fall at this moment, and if not, we can always plot the Fibonacci retracement. The retracement level of 38.2% is at 118.06, followed by 61.8%, 117.10. Right, so these are the few levels to wait for the dollar against Japanese yen, and that's it for dollar against Japanese yen. Next, we have the dollar against the Swiss franc. So there's a channel forming over here, a rising trend channel, and price has touched top, came down a little bit, appreciated again, and it is kind of consolidating in the 1 hourly chart. But we're seeing that price may retrace at this point of time. Rather, it is also resisted at the first exhaustion level at 0.9846. So that could mean that that would signals for retracement. So moving forward, we would like to find out which are the retracement level to go for a long for this currency pair. The very key level would be the price of 0.8734 at the retracement level of 38.2 cents. If price were to begin to retrace, and if not, if you price may appreciate a little bit and touches the top of the rising trend channel again before it starts to retrace. So if it touches the top, there's a reversal and there's a confirmation. You may want to go for a short to trade the retracement. But the first key level to look out for is at the retracement level of 38.2%, price of 0.9734. Right, so that's for the dollar against the the dollar against the Swiss franc. Next, I would just like to touch on the Australia dollar against the Japanese yen. What we're seeing here right now is that these are 4-day charts. There's a falling trend channel in the way, and price is broken below. It got support at the price of 95.20, and it started to retrace. And as it got resisted at the bottom of the previous falling trend channel, we do see there's a movement of depreciation. But right now, what we're seeing is the price has retraced further as well, and it starts to break above the bottom of the previous falling trend channel, and therefore the next critical resistance level will be at 30.2% at price of 98.11. So that this level itself would give another shorting opportunity. So just wait for price to reach the level. And next, I would like to touch on Australia against New Zealand dollar. Again, back to the monthly chart, we do note that this is a very huge range and price is currently at the bottom of the range itself. So zooming into the day one chart, there's a magic candle forming, and the confirmation is about to form. Is on the way to form. If it forms, this will be a good opportunity to go for long a position trade, basically. And stochastic has also suggested oversold. Alright, so just take note in the 4-hourly charts as price touches the 55 moving averages. What we would like to hope is for price to break above it, so that it signals for price to be able to appreciate further. And yeah, so that's for the Australia against the New Zealand dollar. And this would, and finally, let's just take a look at the euro against the Australia dollar. In the weekly charts, we do know that price has got resisted at one of the exhaustion level of price of 1.5260, followed by a bear candle. So during the day one chart, there's a magic candle followed by a confirmation, and we're anticipating the price might fall further. But during the 1-hourly chart, as report in Fibonacci expansion, we do note that the current support level at 1.4988 is an exhaustion level as well, and price has been supported over here. But right now we are seeing the price is actually testing it to break below. And one more thing to note is that it has also broken below 200 moving averages, which also signals the price will fall further. So as we can see, this is a range itself. We can actually set a sell stop if we are betting that price will fall further. Alright, so this could be another trading opportunity, and with that, I have come to the end of my trading analysis video. So thank you for watching, and I'll see you again.